Hi, my name is Hannah, and today we're interviewing Rafael. Rafael manages a hedge fund and he based in Singapore. Today, he gave us his view on business and economic trends as the curve flattens and we emerge into a post-pandemic world.
We're good. So, Rafael, thank you very much for your time. I appreciate it. I know you're a super busy guy. Please introduce yourself.
Okay, my name is Rafael Nemet-Nejat. I live in Singapore. I've been here for nearly 7 years, and I've lived in Australasia most of my adult life. I came here in 2003. I was working in Tokyo in Lehman Brothers, and then and I was working in the sell side in investment banking, and then I moved over to the buy side in after a year, and I've been there ever since. And I've kind of shifted around the world, Hong Kong, New York, Sydney, and now I'm in Singapore. At the moment, I've in the past this is fifth year, sixth year. Me and my two partners, we started a hedge fund. We focus mainly on Japanese long-short equities. We basically take a macro approach and then overlay that and then do long-short around that. And we do that with an intensive research focus, and we try to have a strong macro view, but we also have a lot of strong views on the companies. We started with 3 people, and now we're 8 in total. So the team is growing, and that is in short what we do. We just try to figure out what's going on in the world, what we think is going to happen, try to get it right. Sometimes we don't.
Great, fantastic. Yeah. So I think you are the right type of person to speak to, given the macroeconomic focus. You're doing a lot of research as to what's going on. So we are in unprecedented times to some extent. Everything. One thing is for sure, that post-pandemic, whenever we get out of these lockdowns or whatever, things won't necessarily be the same as they were before. So lots of stuff is going to change. So from an economic and a business perspective, what do you see changing?
Okay. Well, I think ultimately the economic perspective, I guess the economic impact, I don't want to say it'll be short-lived, but I think it's something we'll emerge through. This isn't going to be this isn't going to be the end of the world. And I just to give it historical context, right? I've been trying to find as much information as possible, like what happened during the Spanish influenza. Now, mind you, the information and what went on was clouded somewhat by the fact that World War I was also going on as well, so that changes things. But the short of it, there's a few things which are pretty interesting. Is one, if you think just in terms of the stock market itself, is the stock market basically went down. What you call the first wave. There were like 3 big waves. I think with each one was like worse than the last one. In the first year, the stock market tanked and went down quite a bit. Also, World War I was going on as well, but that was definitely a big factor. And then it actually rallied in the next 2 years after. They were doing social distancing. They were doing those types of things as well. And there's even economic reports where the cities that did social distancing actually outperformed in the longer term versus the cities that didn't. They even had similar political conflicts that you had now, as maybe you don't put them Republican and Democratic context, but there were those types of conflicts that existed as well. So versus then and now, we obviously have a much, much more highly sophisticated market, but we also have better tools. You didn't have such a powerful Fed. I'm not really completely aware of what exactly was the response economically. The federal government, I'm trying to find more information, but the tools we have now are so much more powerful. And then even though, for example, 2008 wasn't an epidemic, it was a complete collapse of the banking system, the credit system. So kind of looking that we're able to emerge then, and I think actually we're much more danger of becoming severe infections, even though we have better medical care, just by the fact that the world everything just travels so much more easily, and we just have such a bigger population, and the health system in a much greater way isn't equipped to handle what's going on.
Mhm.
So I think kind of you take all these things and kind of put them in perspective. What happened then? The tools we're using now. Look, I think the economy will recover. The economy, the fundamentals of the economy were actually really good before this all happened, right? So it's not like in 2008 it was building and building. Like, let's just lend to someone with worse and worse and worse credit and have a completely, horrible, credit rating agency. There's nothing like that. I mean, none of the banks are teetering on collapse now. Everyone, literally, the credit strain now is caused by literally the lack of any movement of dollars in the economy. Like, you and I can't go anywhere. Like, we can't go to the store. We can just do stuff online. There's just no dollars flowing in the economy, and that's actually one of the biggest problems the Fed is trying to fix. I mean, that's what the big panic was about, like a few weeks ago, where you had all these strange moves in the currency, like the Aussie dollar going down to the low 50s, the IDR, the Indonesian rupiah imploding, other emerging market currencies, which have now come back because even the Fed has opened their liquidity windows to them. So I kind of looking at all that there in the tools, it feels like we're in a better place. I mean, the question is, like, right now they've like frozen the economy in amber, and whether that works or not, I just don't know. I mean, but the thing is right now, so we've done all this stimulus that puts a floor, like they say the expression, don't fight the Fed. That's what's and so I think it's hard for the markets to really go down for now. We're entering the earnings periods for a lot of stocks, so kind of that will exhaust even more bad news, as they say. And then I think for a while we're just going to be following infection curves and seeing how well we're handling it. And I think is like people, going specifically to the U.S., people like to view this as a partisan lens, but I mean, really, the Republicans and Democrats, they have a singular focus. Maybe how they view longer term, how it changes things is different. Is like nobody wants to see the economy implode. Like, it just doesn't benefit anyone. The shape of that might be a little bit different, but in general, it seems like everyone was pretty much on board in a similar way they were in 2000, and 8. And I would argue, and that's despite the environment being more partisan. So in that sense, I feel like things can be okay. I think it's kind of hard for us to see that because it's just like scary. You have kids, like they're at home, like it's you got to wear a mask when you go out and that. But I mean, I just think that's the way things are. This isn't going to be the last time we have to take. We're going to be able to take a holiday or whatever. I mean, but the biggest thing is we need to just look out for those, the whole new economy that was created. All the, all these people who, who work anywhere from Uber, or people who work in the restaurant industry. Can we help those people? Because if you're going into, maybe this is in the technology front, if you want to talk about the shifts that have gone on politically, the reason we have Donald Trump as president, the reason we have, Salvini as president of Italy, and I could go on the list, you have a right-wing Scott Morrison, or in Australia, Jair Bolsonaro, is because 2008 fundamentally shifted the way the economy was. And I mean, for the good that, you could say that the monetary easing policy is done in terms of asset reflation and all these things. Is, I mean, personally, I really feel like it just exacerbated the gap between rich and poor in a way we've never seen before. And I think especially in countries like the United States where there isn't a strong safety net. Yeah, those things get exacerbated. I mean, I definitely think people in Australia would feel that, or people in the UK feel that, but it's not anywhere near the US, and that's why this is just kind of coming apart. So now what happens is, if we don't take care of those people, I mean, you could, for all the people who aren't a fan of the current, very populist, Donald Trump like regime, like you might be wishing for him in 8 years time. Or actually, I mean, it was longer. As in 10, 12 years time, you could, if we don't do something to support those people, because they just might get fed up. So I think that's one of the big changes. And I don't know, what's scary is that current populist tinge is taken on a very xenophobic, very close-minded, approach, and if that kind of unravels and kind of continues on its other path and puts on another more extremist populist, I don't know where that goes, but it doesn't feel like it's in a very positive direction. But that's but that's like I'm giving a very negative scenario. Mind you, like once again, to just put a little bit more in perspective, the U.S. is the leader of the world politically, and I think one of the big things that's kind of confused this whole process in 2008. You had all the central bank heads, meeting. Everyone was talking like coordinated. The response felt very coordinated. This feels very haphazard. It feels a bit. I don't want to use the word bungled, but it feels. If it doesn't feel well put together, so even though the response is there and it's in response, it doesn't feel like it could have been the best one. I don't think it's necessarily like, at least from the fiscal and economic side, it's necessarily been a bad response. And so,
but it's been consistent.
And the thing is,
consistent in the sense that we're as you identified yourself when you pointed out certain world leaders, we have become more nationalistic. So therefore, it makes sense. Yeah.
So I think actually the important thing to talk about is, because the U.S. takes this leadership role, I don't think even when you've had kind of populist governments come in Europe, the system hasn't unraveled. People are just really frustrated with, when they're a leader, and I don't like to say that the United States is the leader, is everyone's leader, but when it's kind of this, typically it's been more of a unipolar world where they've kind of been sort of the unofficial head or official head, if you want to call it that. People are just very confused. Like, the institutions, everything work, that they want the U.S. leadership role. So it's not that this has disappeared. So, but these are, at least politically, I think these are the things to really, really to watch, because I think, this has been, some people would argue, Donald Trump, becoming president was a bit of a sneak attack or whatever, it took people by surprise, but doesn't mean you can't get something. And right now we have all the ingredients for things to get worse. So, I mean, if you're going to, just talking on the political side, those are, some of the changes. And I fear, even if you look at I keep going back to the United States, if you look at even if you look at the 2018 turnout, and you could say, maybe someone like, more moderate like Joe Biden, I kind of worry that Donald Trump, for all his faults, is a very charismatic guy, and he's quite funny, he's quite entertaining. There's a reason people voted for him. I don't get that vibe about someone like him. So I mean, there's a lot of what ifs.
So let's stay with that for a while. So you started off saying that the approach has been within the U.S. has been bipartisan, but wouldn't the Democrats benefit if the economy doesn't recover noticeably by November? Doesn't it benefit them? Because we're in an election year after all, right? And Trump, up until recently, his rallying cry was, "Hey, I fixed the economy. Look at me." So now, does that have implications though?
I think it's a bit tricky because I guess maybe in a vacuum, maybe, but I think it's much more complicated than that. And the reason I say that is, if you look at, especially, why did the Democrats sweep in 2018 is they were basically very moderate, people who were much more willing to be bipartisan. And I think kind of the extreme example you have is Donald Trump. When he went there and he said during that shutdown, "You can blame me," and you almost had Nancy Pelosi and Chuck Schumer. I mean, they were actually laughing, right? He took the heat. Now, it's one thing when you're in kind of a better economy and things like that are happening. What happens now when you're seeing the jobs number 6, 7, 8, 9, 10? It goes up to 16 million, and people in the end, they call them Obama Trump Democrats, right? What happens to these people who wouldn't have voted for Donald Trump? All of a sudden, they see Nancy Pelosi and the Democrats are playing around, and people are going to be much more sensitive than they were during a shutdown, something that's temporarily, and everything reverts to normal in a few weeks, right?
Yeah.
This is something much more severe, and I think they know they have to tread carefully, and they know they've scored points by being bipartisan. You know, even the whole leap to impeachment, like Nancy Pelosi didn't do anything, even though it became a partisan vote, didn't do it until she knew she had all the Democrats on board. I think there was maybe just one, maybe like Tulsi Gabbard, or something like that. But so I think they need to be careful because, you know, if they start doing stonewalling, like they just do up and down votes and the Democrats, they vote just completely against Trump. And the thing is, the Republicans are much better at messaging than the Democrats. So, I mean, they could easily pin the blame on them and win. So I think it's like they need to tread carefully. I don't think, I mean, unless they're the ultimate spinsters and can manage to just make it look like he tanked everything. But I mean, I really hope that, I don't want to be that cynical.
Okay. All right. So let's pivot back to the economy though. So recession or depression? Where do you stand?
Well, I mean, I guess by all the metrics, it looks like it's heading for a depression. Maybe not a 1920 style type depression, because maybe with all the tools we have, we could make it, much more short-lived. But I mean, just looking at the jobless numbers, the GDP, I mean, it'll look pretty bad. I mean, I don't think we're gonna reach the point where we're gonna have people wandering around like in the 1920s, going from farm to farm, looking for jobs. I certainly, it won't look like something like that. But I think we have the tools. So I'm a bit more optimistic. I think it kind of comes down to, I don't think it's gonna be a V-shaped recovery. U and L shape. An L shape would be like would look something like kind of worse than the Great Recession. That's definitely within like the 3 standard deviations of possibility. So I think that's kind of, if you want to just think of it market-wise, how the markets will price it in, is like what's the still wandering around from farm to farm, like the early 30s before the New Deal. That seems like still 6 or 7 standard deviations. But having a very, very slow recovery where people are borrowing that money from the small business fund to rehire, and maybe they rehire and it just doesn't. They can hire those people and keep them for 6 months, and if they don't, and if the demand isn't there, which is very realistic, right? Yeah. They might just let them go again.
Exactly.
So I definitely don't. I think a V shape is to me seems very unrealistic, and even. If you let's pretend for a second that all the data that comes out of China is really accurate, right? China is treading very slowly, and from the people I speak to there who are very involved, and they are a bit more optimistic. Everything is the recovery seems very slow. It seems very U-shaped. So, assuming that trajectory is true, and we follow it.
Yeah.
I still think it's going to be slow, and the reason I'll contradict is what I would say is the best set of data we have about the infections and everything are coming out of the developed world. And what's going on in Spain, Italy. Sorry,
I have FedEx here. I just need to hand them some.
Yeah, go get it.
Yeah. Okay, great. Thank you. Sure.
Yeah. Is out of the developed world, and if you say the amount of infection rates, and also the fact that Western society, as much as we can social distance and do mandatory, mandatory closures, which there's only so long you can do it. You just can't do it the way the Chinese government can do it, which makes me think, people will be scared, for a longer time to go out, which kind of to me supports that whole idea. But then that goes from an investment perspective. You just take the deep value that things will just remain depressed for a while. So this just becomes an opportunity to buy, even if asset prices don't inflate. They take a long. I mean, they took a while, even during the Great, recession. They did this. It was 2000, 2008, 2009. It wasn't really until about 2010 to 2011 that really not stock prices, but really asset prices, hard asset prices, really started to move.
But from in terms of the real economy, do you see that there was really a recovery from the Great Financial Crisis, or did it just? So do you see it as having recovered to the levels that it was pre-2008?
Yeah, I think so. I mean, look, I feel, but this is just an ongoing problem that it happened is I feel like I said before, the gap between the rich and poor
Right.
has widened. But I mean, it's a weird thing. That doesn't, if that was getting priced into stock markets, then the stock markets wouldn't be up. So if you want to use a metric for recovery as a stock market, I mean, let's leave out, the coronavirus is not the current administration's fault. You know, like if you leave that out, you know, we had a very strong recovery. We are at all-time highs. You know, asset prices in the United.
2 seconds.
Yeah.
Sorry about that. Yeah.
So no, that's okay. Yeah, I was just saying that the asset prices, all these things, they did recover. You know, it's just really, you know, I mean, there are more jobs, but are they higher quality jobs, right? And that's a hard, I mean, that becomes a little bit more qualitative. So I mean, like, you know, I mean, do I feel like I'm in a better position than I was then personally? Yeah. I mean, I think if you're a guy who's driving you know, part of that kind of new economy, who's driving an Uber and doing deliveries, you probably don't feel like that. You probably are really struggling. You've actually seen prices inflate, and your wage hasn't gone up. Maybe it's easy for you to get a job, but it's just not a very good job.
Right. So there's certain trends that were happening even before this that I guess this situation would accelerate or exacerbate, right? So you mentioned income inequality. You mentioned economic nationalism. What other trends do you see? Not continuing or maybe being exaggerated by what's happening now?
I mean, those are kind of the main ones that come off the top of my head at the moment. I'll think of anything comes to me, but those are just the main, you know, the political nationalism, the income gap. And I mean, put it to this way, I don't see things going on right now that are going to reverse those trends. That's what makes me, I
agree with you.
Concerned.
So it will exacerbate. So that would lead to some degree social instability, and then, you know, the inequality is not just within nations, but also between and among nations as well. Because I would imagine emerging markets would suffer as there's a pullback of capital, right? And their commodity prices. So I'm in Indonesia right now, so commodity prices will continue to be weaker on the back of weaker demand. So from an investing perspective, so let's flip it up. From an investment perspective, what are the opportunities?
Right now, so it's kind of okay. So I mean, I guess it depends on which asset class. Do you mean stocks? Do you mean real estate?
You tell me.
Do you mean bonds?
You tell me.
So I mean, I guess kind of like the really quick and dirty going. I guess. So I mean, if you want to start with bonds, if you consider that the Fed is willing to buy every single piece of garbage credit, you know, like, and basically now the real risk of a default, at least liquidity crunches have been eliminated, like those types of asset classes. You know, U.S. Treasuries in general, a lot of U.S. corporate debt should outperform stocks. So I mean, the kind of stock markets, the U.S. Global markets, let's say for the most part, putting a range, are down 30-40% in March at the worst point before the rally at the end of the month. I think kind of that less, or I call that the deleveraging move, which was everything was driven by oil, the oil price going down. So the sovereign wealth funds had to sell. Everyone's panic selling, and literally, like I said, this was caused by the actual lack of dollars flowing through the economy that everyone was selling. That kind of rally is done for now. The Fed has done their stimulus. So I think the trick is now is monitor. You're going to have to monitor the recovery. And I think kind of some of the harder plays in just buying, like Microsoft, Netflix, Amazon, Google, all these things have retraced, right? So do you want to buy them at previous levels? I mean, probably on a 5-10 year perspective, it's fine, right? But I mean, that's not anything. I wouldn't say that's like an interesting trade you're making on the back of what's going on now. Like you kind of miss that kind of that extra 30% juice. I think kind of the trade that's going to be more interesting, and it's depending on the market. I think in the U.S., real estate is already starting to. You're going to probably see the biggest pressure in the low end, the lower kind of lower middle class geared towards real estate, which obviously will put pressure on the higher end as well. And I think when sadly, I think it's going to happen. A lot of people are going to go bankrupt.
Yeah.
I think that the Fed response from the anecdotal that I've heard so far for delivering the money hasn't been delivered that well so far. Hopefully it improves and this doesn't happen, but that'll take the floor out of the real estate market. I think the downturn won't be anything as severe as 2008, but I think you're going to I think there's going to be a chance to buy real estate. I just to put something in perspective, right, is if you're a guy and let's say you're in trouble and you want to go right now, typically you're like, I want to sell my house. I live in San Diego. I'm having a hard time. Let me just sell my house and I'll rent something. Let's just say you actually can't go sell your apartment. You can't do a viewing. Right?
Yeah.
So, I mean, once kind of this eases and, even if they say, 4 people can go and see a house at a time or something like that, or at least they can kind of, there's some system back in place to do that. That's when we're probably going to, especially if the recovery is slow, that's when you're going to see that light come out of the real estate market. And I think that will also put, pressure on other asset classes. So I think kind of like if you're looking
let's talk real estate for a little bit. On the back of, another trend, we spoke about income inequality and wealth inequality, which are somewhat related. We spoke about economic nationalism, but there's also a trend to remote learning, remote working. And I'm looking at what has happened, and this is pre-pandemic with the whole WeWork fiasco. And to what extent did, if I had like an office and I had 30, 40 seats, now I'm thinking, you know what, I really don't need all those seats because half of these guys can work from home. So maybe I just need half of that. And what does that say to commercial real estate? And then if I'm working remotely, then I don't need to live close to the CBD. I could live a little further outwards, I get more space, a little bit leafier, green, quality of life kind of stuff. So do you see that leading to longer term changes in the real estate market?
So actually taking a step back before we even touch on the work from home,
okay.
There were some very, very negative trends already like that in the real estate market to begin with. So specifically e-commerce has really destroyed the retail rental market in cities across the world, with the exception kind of more if you have a prime, like some mall they build in the middle of Manhattan or Los Angeles that's just like always busy, where the prices are stable and kind of rising. But for the most part, kind of the the stuff that's more the periphery, that stuff has continued to be under pressure. I mean, you've seen it even like Singapore, and the rents haven't gone up, and that's you see it in places like Japan or market I look up specifically. It's really been under pressure. That trend is only going to continue, work from home will also create a additional pressures on that as well. So that's not going where. Yeah, you're right. I definitely agree that longer term. That's definitely something that'll put pressure on office space. Where companies in the end, they'd love to do that. If they believe they can achieve the same amount of productivity and save money. Well, that's especially listed companies. That's what. Yeah, it's just a no-brainer for them, right? Obviously, there are other issues that they can work out. Like compliance and all these things. How do you safeguard information when someone's got access to company information? I don't care what you say, it's pretty easy to copy that information, even if it's you're connecting via VPN, right? And you're at home. So I think that will happen. If you want to talk this is hard to say, residential in the middle of the city, maybe I think that type of real estate will remain strong. Maybe it puts pressure in the sense that that the rise in those prices is slower. For example, the extreme examples are places like Sydney, for example, or New York, or I guess a lot of big cities, London, where people just were willing to sacrifice and live in smaller places because quality of life actually was in some ways was better living in the city because it meant they didn't have to commute an hour and a half. So having that time, so once again, if you can reverse that, obviously that takes a lot of that pressure off of rents and everything. But that's a trend that gets reflected very slowly. One thing as well is companies. One reason they like to have everyone there besides efficiencies, they like to control everything that's going on, right?
Yeah.
So,
okay. So I want to jump back onto the economic nationalism. So we've seen, ever since the administration took hold of the White House, we've seen a colder relationship with China. Now, what we're seeing is that to some extent, Europe is doing the same as well. And now Japan as you would know, Japan is indicating that they would like to reduce their dependency on China as well. So there's a reshoring or nearshoring or whatever of the supply chain away from China, which was happening before. We know that. Investment, manufacturing, whatever was declining out of China. And it seems set to continue. Do you see that having any meaningful economic impact on China? Or they really don't care because the counter argument to that was, yeah, they knew that, the CCP knew that, and they were shifting from an export-driven economic model to a domestic consumption economic model anyway. What are your thoughts?
I think it's definitely a little column A and a little column B.
Okay.
I think you saw that during the GFC when all that demand dropped globally. That was something they ramped up, and actually their economy was essentially, I don't like this word, but it was decoupled in some sense. And I think they've always had that in the back of their mind. The thinking of the Chinese government. My impression is always that it's very long term. I mean, they love these 5-year plans, 20-year plans, and if you are a dictatorship, I mean, you still, and even when you're a dictatorship, you still can't completely ignore the people, but you definitely have more flexibility around ignoring them. So I think that's definitely the case. I mean, that's also a big part of all the technology they've stolen from companies over the years was to kind of prepare them for that. I think China definitely does not, regardless of how you feel about China definitely does not get shut out of the global market, because I think people, it's the same reason, if that were true, Saudi Arabia should have been long gone, especially after the US became a net, energy, energy exporter, oil exporter after the shale gas revolution. But it didn't happen because people like Saudi money, and and in some ways, if you're going to look at that, Chinese money is probably a lot more palatable than Saudi. I mean, right now maybe harder because there's so much anti-China feeling, not just in the United States and other countries, but it generally has been more palatable. So I think it's going, like, those trends will happen, that there's going to just be, I mean, just for just in general, because people want to diversify supply chains, that's going to happen, and that's going to continue. But I don't think people necessarily steer away from China. Is, I think, actually a very weird thing, just kind of on a separate notice, for, like, I've always been very conflicted about China, and like, to me, I found it very troublesome, to have such a, like, it worries me to have such a powerful dictatorship. And regardless of how you feel about Donald Trump, the interesting thing is you could say the approach or whatever, you don't like it, his strong arming of China and his bashing of China, regardless of what the aim was, just to gain political point. And I think it's actually genuinely also kind of how he felt.
Sure.
There's something to chew on for actually everyone there, whether you're a Democrat or Republican. Like, there's some, and from on the one side, he may love his dictators and he and everything. On the other hand, it's kind of like, it's good meat for someone else who loves democracy. That like this is just more meat and more reason for them also, if people do want to shift the other way, to really have a good reason now where they can actually push China out of the way and say, look, they're just not a democratic country. And that is something that the business community, especially when they've been disrupted and hurt, is more willing to go along with, whether it's the NBA. Look, they want the money, but
yeah,
so I mean, there's things there that it's not just all pushing in one direction. There's things to be taken out of there. Like I said before, the international system isn't broken. One of the pieces that was, China was a big piece of pushing everything in that direction too. That's been disrupted. It's a matter of how you re-navigate that. So, there's a, but I mean, that country isn't going to go away. Like you can, I mean, you could take the extreme view. I want to never give a visa to another Chinese person again. Like I don't know how long that view, sticks for, right? It just doesn't seem realistic.
Okay. So yeah, there may be some impact. For example, some of the acquisitions in Europe being blocked by the relevant governments. Maybe they'll push back on 5G investment or whatever. But for the most part, China will continue to be a force to be reckoned with. I mean, it is what it is. Yeah. It's big. It's there. It's not going to go away, right?
But but it's very exciting to have those discussions now, right? Like even before the coronavirus, like people were happy to take the 5G towers from Europe. So I'll tell you what's really interesting is Malcolm Turnbull was doing private meetings, the former Prime Minister of Australia, at the Credit Suisse conference last year, and one of my close friends was attending one of the meetings, and he said this was one of the things he feared the absolute most, was that equipment getting built in Europe, because he said it was going to be linked to it, and he said this is one of his biggest fears. And the fact that we're actually having these discussions now and people are thinking about it, and it's not just like, let's do it the cheapest and everything, we're actually having discussions that we were having in the 60s and 70s. I mean, I don't know if you want to frame it. People may say we're framing it in a Cold War, but it's bad. But these are important things that protect our freedom, that are good. Sorry I interrupted you. But.
No. That's a fair point. And, that reminded me of Zoom. I don't know if you got that email this morning from Zoom, where they're asking you to check the box as to where your data packets or whatever. I'm not a technical guy. But basically, you could uncheck the box that anything gets routed through China. So obviously it came from somewhere. But okay, let's pivot a bit and look at Hong Kong. What is your outlook on Hong Kong? Is Hong Kong over, or is it just looking in a different direction?
I don't think immediately, right?
Yeah.
It's. These things unravel very slowly, right?
Yeah.
And to put that in perspective, you've kind of had now two major events that you would think, if you were having a casual conversation 5 years ago, this is what you'd say could potentially unravel it in 1 or 2 years, and that hasn't happened, right? But I think the key points of it are that it's the hand of the Chinese government is becoming much more heavy-handed, and Hong Kong, which has always had a huge pride in its independence, and regardless if you could say the nature of the chief executive, the Beijing appointing part of it, but that they were different. They did not look at them. People in Hong Kong in general did not look at themselves as mainland Chinese. They didn't identify themselves. They obviously maybe felt a brotherhood because they border, but they didn't see themselves. And the police now which is a very highly respected organization, is now looking something much more similar to the PLA. Everything they're behaving, the people's feelings about the government are changing, and so I mean that's the one important ingredient. The other thing as well is we're now 2020, 27 years from now is when the handover happens, right? Okay. They may decide to extend that, and I don't think that would be unrealistic. They may just extend it indefinitely, one country, two systems, because China has a lot to benefit from that as well. But if you see that freedoms are being clamp down on. The Chinese has more and more say what's going on. It just ultimately, even with that extension, just becomes a lot less attractive, place to come. And then a place like Singapore just becomes, if Singapore continues to do a lot of the right things they've been doing, becomes within the region a much more relatively attractive place to do business. I mean, there is this regional competition, and the path I think that Hong Kong is on is not a good path, because kind of it's been this excellent place to do business in the mainland, while kind of having a bit more freedom. But I've even seen, personally, my interaction with analysts, economists who specialize in China, the conversation they can have with me one-on-one is very different. Like, they used to be able to publish a lot more freely and be a lot more critical. Like China, that's the thing I think people don't appreciate. China in 2008, and I want to say 2008 is the Olympics, not as from the GFC. Was a much freer place. I don't mean free in the sense of the United States, but it had a lot more freedom. You could go around the country. You could say more. Like, there's it wasn't this place with social credit points and where they're putting people in Xinjiang and camps. It was no utopia, but I would rather live in 2008 China than 2020 China.
Absolutely. So Hong Kong, it will continue one nation, two systems, but it'll be a different Hong Kong. And Hong Kong is less international, it's more China facing, naturally, understandably. And that, back in 2008, one can have a conversation, the financial centers in Asia, it's Hong Kong versus Singapore. Whereas now Hong Kong is not really perhaps that much of a conversation starter if you're internationally focused as opposed to China focused. But so, this is Singapore's time. But then my question is, where does Japan sit in this?
So I think Tokyo kind of blew it up a long time ago. Okay. I think in the early 2000s. You had speaking specifically about the financial industry, they all moved offshore to Hong Kong and to Singapore to a much lesser extent a long time ago. And that had, there've been talks about special economic zones and everything, but that was supposed to all be part of Abe's third arrow, which has been disrupted, and that never really happened. And it doesn't help that, once again, for all the things that are going on, and people could have their feelings about Hong Kong or Singapore about the governments, is financially and legally, Hong Kong and Singapore are very, very transparent places. I'm not saying it doesn't happen, but those are two places where it's not, if you write contracts or you make dealings, you can be confident that whatever is written is going to be protected by the law. And the Chinese government also has an interest in making sure that system continues to exist in Hong Kong. All right. In Japan, contracts, etc., have been opaque. They continue to be opaque. I mean, I don't think Japan is like a ultra corrupt country or anything. It's just like not a very easy place to do business. And in my 17 years of looking at Japan, there's been easings from a stock market perspective, etc. They're investable, focus on shareholder returns, better corporate governance. That's definitely happened. I'm a big fan of the current administration in Japan, but it's not enough to get excited about international. Japan will be an important international center because Japan is such a major economy, and that's not going to change. And they're doing things to try to keep it there, but Tokyo is not going to be important the way London and New York or even Hong Kong and Singapore are. I mean, I don't really see those changes really to make it into those types of financial centers, even though it's obviously GDP wise and everything, it is a significant financial center. But
okay, what are your thoughts on India? Is that the up and coming China replacement?
It's look, I'm not an India expert by any stretch of the imagination. I think India basically isn't my impression, and I've spent some time there, and I've looked at, is it India? Okay, first of all, India is a democracy, and a democracy in the good sense that property rights, like you can't just go to a slum, tear it up, and say we're going to all put you in nicer homes. Like, it's not simple like that. You just can't do stuff like that. So the pace of change is slower. But sometimes, in many ways, like the United States, a lot of times the people complain that the pace of change can be slow, but the fact that whether they're filibustering in the United States or these changes are harder to happen. Once they happen, they stick for a long time. All right, and that's good. And India has this amazing intellectual capital, and I think that's only continue to grow. But whether India doesn't have the infrastructure, though, like China's infrastructure is unbelievable. Yeah. Like China's high-speed trains, roads. I mean, they are better than the United States. Right?
Absolutely.
Absolutely. And that's actually not even like disputable. Indonesia's infrastructure is improving, but it's not that good. And I think something, as much as, look, I value a liberal arts like education within a democratic system, but I think what people don't appreciate about China, something the West doesn't get, is for all the jokes people make, like, oh, they're bumpkins, they spit, they're not, people say these racist things about them. They don't realize that, like, Chinese people even 20 years ago versus 20 years are way more sophisticated, and they have their tastes are more sophisticated. Even if they're getting filtered information, their understanding of the world is they get that they're living in a smaller world. The people I meet my age in China, or the younger people I see in Singapore from mainland China, like they're just very impressive. Like a lot of them, and so unless that trend all of a sudden reverses, I don't think it's maybe if it goes back to what you say, where they're diversifying supply chains and put them in different places, like India fits into that puzzle. But I think it's going to be fairly slow. I mean, I put it to you this way: given the choice, I'd rather live in India than in China. If those are my only two choices, but that's just a personal decision.
Okay. All right, that's great. Appreciate that. So if I were to step back, I would say that your outlook is optimistic. So you're not like Ray Dalio saying, oh my God, depression, right? You're not saying that. You're saying it's somewhere in between a recession and a depression, and you definitely see a recovery. Whereas some people...
I mean, look, the extreme case of that is they don't find they don't have find a vaccine. Yeah. Right, and that just means it goes years and years on just fighting outbreaks, and I mean the treatment will just get better naturally, right? Yeah. I mean that's just what happened. That you can't argue, and so this just goes on until you have herd assuming that there's immunity. Maybe then that extreme case is 5 to 7 years. So we kind of live in this state where where I actually may not have a proper meeting with you for a long time, but that's not going to go on forever. And I don't believe the thing that people aren't going to want to, that it's going to change everything and people aren't going to want to hang out, because people enjoy socializing and being in contact. Yeah. The biggest threat to that are smartphones, to be honest, that people don't talk to each other. Okay, no, I mean that people are just on the, it's like my wife said, she owns a salon, and she said that the strangest thing is she'll like have young people come in, and their conversation when they're getting their hair done, the younger girls, is literally just to sit there and just compare Instagram pages the whole time and look at videos. Yeah, it's like a very weird conversation. It doesn't seem like a very fun conversation to me, at least. But anyway, that's a whole other. I think the smartphone's a bigger threat than social distancing is, in my opinion.
Okay, great. Thank you very much. I appreciate you taking time to give us some of your insight and your perspective. Thank you.
Yeah, no problem. Anytime. I'm always happy to help you, Derren.
All right.